ex Technologies Holdings former chairman Juan Kokoi has been blacklisted by the US due to his activities at the helm of the infamous 14K triad. Reuters reported that the US had slapped sanctions on Juan, who is the leader of the organised crime group involved in drug trafficking, illegal gambling, racketeering, human trafficking and other criminal activities. Better known by his gang moniker Broken Tooth Koi, he is also reportedly a member of the Chinese Communist Party's Chinese People's Political Consultative Conference. The CPP has, however, denied this. The US Treasury also designated 3 entities owned or controlled by Juan, namely Cambodia-based World Hongmen History and Culture Association, Hong Kong-based Dongmei Group, and the Palau China Hongmen Cultural Association in Palau. According to the Newswire, the US Treasury said the World Hongmen Group had co-opted elites in Malaysia and Cambodia, continuing a pattern of overseas Chinese actors trying to paper over illegal criminal activities by framing their actions in terms of China's Belt and Road Initiative and other major initiatives of the CCP. One's properties that fall under US jurisdiction are frozen under the sanctions. The Macau billionaire was appointed the independent and non-executive chairman of ex-Inix in August this year. He was released from the prison in Macau in December 2012 after serving a 14-year sentence for charges including loan sharking, money laundering and heading a criminal group. After a short stint of 4 months at ex, he resigned from his post on December 2nd and was succeeded by retired IGP Tan Sri Muhammad Fuzi Harun, who also resigned from his role a mere 5 days after the appointment to spend more time on personal interests and ongoing businesses. BIMB Holdings has gotten the nod from the Ministry of Finance and Bank Negara for its restructuring plan that will see it transfer its listing status to its subsidiary Bank Islam Malaysia. Upon completion of the exercise, Bank Islam will emerge as the only pure-play, full-fledged Islamic financial institution to be listed in the ASEAN region. In a statement today, BIMB said the listing will allow Bank Islam to better position itself in the Islamic finance and Islamic capital market and capitalize on the growth of both markets in its efforts to expand its customer base. BIMB, which is controlled by Lembaga Tabung Haji, announced its plans last December. The transfer will be effected through a share swap scheme. BIMB will, however, first undertake a private placement of new shares to raise 800 million ringgit to fully settle outstanding sukuk held by Tabung Haji. The restructuring will ultimately result in the group having 2 separate listed entities on Bursa Malaysia, Bank Islam and Syarikat Takaful Malaysia Keluarga. Airasia Group is said to be in talks with India's Tata Group on the future of their joint venture Airasia India. According to CNBC TV 18, Group CEO Tan Sri Tony Fernandes said at a Kappa Centre for Aviation Live event yesterday that India's aviation industry is a competitive market which is tough for outsiders to come into. He reportedly said that Airasia has had fantastic partners in Tata Group and that without Airasia India, the Airasia brand wouldn't have been well known. But it is time for a review, and if things don't feel right, then Airasia Group will look at other options. Tata is set to hold a 51% stake in Airasia India, while the remaining 49% is owned by Airasia Group's wholly owned subsidiary Airasia Investment. The Economic Times, citing recently added clauses in Airasia India's shareholder agreement, reported yesterday that Tata will stop dues payment by Airasia India to Airasia Group if the latter does not provide funding to their low-cost airline JV before December 31st, 2020. It's that Tata will also start deducting the dues and setting them off against equity shares in Airasia India if its JV partner is unable to bring in funds by subscribing to a rights offer of at least 300 crore rupees or about 166 million ringgit. The environmental, social and governance issues afflicting Top Glove Corp have led to analysts revising the company's valuations. CGS-CIMB, while maintaining its ad call for Top Glove, has cut its target price on the rubber glove giant by 11% to RM8.90 per share from RM10 previously. This cut is premised on a lower price-to-earnings ratio of 16 times for calendar year 2022 to account for the ongoing concerns, particularly over its foreign workers. RHB Research, which also has a buy call on Top Glove, cut its ESG score to 2.78 out of 4 from 3.22. Still, with the higher equity value per share of RM10.56 from RM9.50 previously, its target price remains unchanged at RM9.50. A fund manager who requested anonymity said ESG-focused funds would not be queuing up to add counters with ESG issues, and even for non-ESG-focused funds, seeds of doubt would emerge in terms of whether such issues would hurt a company's long-term business continuity and returns to shareholders. While Top Glove is certainly not the worst in this aspect, he said it has to demonstrate that this is something it is willing to address and ensure it does not repeat. Top Glove's shares closed 2% higher today at RM6.99. Burma's Auto says second quarter FY21 net profit rose 22% year-on-year to RM24.79 million, boosted by improvement in domestic sales. Revenue climbed 31% year-on-year to RM599.84 million. B Auto declared a second interim dividend of 1.25 cent per share, that's lower than the 2.75 cent per share paid a year ago. In a statement today, B Auto said the improvement in sales volume for the domestic operations was mainly attributed to the positive impact from the government's short-term recovery plan economic stimulus package, which provides sales tax exemptions till December 31st, 2020. Sales volume in the Philippines, however, continued to be negatively impacted by the COVID-19 pandemic. The group is cautious of the resurgence of COVID-19 cases and its impact on the overall economy, and expects the automotive sector to remain challenging in 2020 and 2021. Any launch of new or new facelift Mazda models will be dependent on market sentiments and economic conditions then.